Singapore state investor Temasek's net portfolio value went up by $7 billion, bringing the total to $389 billion in its latest financial year. That's mainly due to investment returns from the US and India. One-year shareholder return also rose to 1.6% from negative 5% last year. Nadirah Zaidi breaks down the numbers.
Transport firm BYD was one of the companies Temasek invested in last year. The state fund deployed $26 billion in sectors like technology and financial services. Singapore remains the single largest market in its portfolio, followed by the Americas and China. While investments took a hit due to underperformance in Chinese capital markets, long-term performance remained strong. 10-year shareholder returns stood at 6% and 7% for 20 years.
I think the performance has been quite conservative, especially when compared to other global peers. It's not only financial performance that we should be looking at, but also the exposure that they have into China. So the past 3 years have been deaccelerating quite rapidly in the Chinese financial markets. And I think that has affected Temasek's financial performance. But overall, I think it was a very positive year.
Looking ahead, Temasek sees risks in geopolitical tensions between US-China and the conflict in Ukraine and Gaza. They're also keeping a close eye on volatility around the US elections, but still, the US will be the largest beneficiary of capital for Singapore. The state investment firm says it also sees investment opportunities in India, Southeast Asia, and Japan.
Digitization of the economy has been a real positive for economy. It's benefited from the geopolitics. It's building its manufacturing base. So we really like India as a market. When talking about Japan, what has been attracting us to that market really is the corporate reforms that is taking place in those markets. We see opportunities to work with some of the PE funds in the market to actually unlock value from corporate restructuring.
One analyst says this strategy is consistent with other state funds.
There may be some opportunities down the road, like the revival of the venture capital sector, which Temasek is a very good position to benefit from, or the technology opportunities where Temasek is also increasing the weight. And in China, there are certain sectors that are poised to grow or keep growing at a very high rate, such as tech, AI, retail and consumer, everything related to urbanization and growth of the middle income population.
Temasek says it will continue to maintain a high level of liquidity and work with portfolio companies to capture market opportunities.
44 billion Singapore dollars. That is the portfolio value of Temasek Holdings' sustainable investments as of March this year. Now, the new disclosure is part of the state investor's first sustainability report in a bid to be transparent about its progress. The investments include companies in food tech and aquaculture, as well as businesses that make sustainable steel and batteries. Of the total, $38 billion went to companies with products and services that would, among other things, contribute to Temasek's net zero goals. The other $6 billion was in high-emitting sectors looking to transition to climate-friendlier products. Now, year on year, emissions from investments fell by 6 million tons of carbon dioxide, equivalent to 21 million tons of CO2 equivalent. Temasek says the drop was largely due to the sale of Sembcorp Industries' coal-fired plants in India. As for the company's goal to halve its emissions by fiscal year 2031 from the baseline of 2011, now this is the first year that emissions have dipped below 2011 levels, but it is only a fraction of the bigger target. Turning to carbon intensity per employee, that climbed 58% from the prior year, mostly due to the resumption in business travel. But it is two-thirds of what it was from pre-COVID levels in 2020. Temasek also raised its internal carbon price this year, and this embeds the cost of emissions into its investments and operating decisions. It's now at about $65 or 88 Singapore dollars per ton of CO2 equivalent, and that's up by 30% from last year.
To deliver sustainable returns over the long term, it's important that we have a portfolio made up of companies which are resilient and which have got sustainable business models. So to us, there is no conflict between the two objectives. It's important that we actually drive the decarbonization of our portfolio in line with our goals to achieve sustainable long-term returns for our shareholders.